Catalina here. Today we're going to talk about the impacts of student loan forgiveness on credit scores. I think that's really important because we get questions around how does getting loan forgiveness or enrolling into public service loan forgiveness impact my credit score? And if I leave a nonprofit or I leave the income-driven repayment plan, even if I'm not at a nonprofit, how will this impact my credit score? Also, because people care about their credit score, right? It's kind of like your financial score. And credit score is made up of various parts, like your payment history, for example. It's made up of your debt to income, how much debt do you have relative to income, that matters. It's also made up of different types of credit, like a spread of credit, like a student loan versus a mortgage versus a car loan, etc. And a few other. But the point is the first question is like, if you enroll into an IDR plan or the public service loan forgiveness plan, what is the impact to your credit? The impact to your credit is actually at enrollment is pretty minimal. We've heard of impact from nothing, depending on the reduction per monthly payment, down to up to about 9 to 20 points. It's not a huge credit booster. I've never heard of it negatively impacting your credit though, but the boost, it gives a very small change to your credit when you enroll. And the next question we get asked is, what's the impact to my credit if I decide I'm no longer going to be a public servant for whatever reason and I don't enroll in IDR anymore? Or what happens if I got a better paying job, so I don't want to be enrolled in IDR anymore and I just want to pay it off? Like, what's the impact to my credit? We've gotten that question as well. And the answer to that is, first and foremost, if you do not care about IDR, as in you don't care about income-driven repayment for the purpose of getting loan forgiveness, but you care about just paying off your student loans because now you have a better paying job and you can afford to pay them more now, my number one advice, even beyond worrying about credit, is worrying about continuing to enroll in the program, because if you stop enrolling, then all the interest that was populating and accumulating on that loan that didn't get paid when you were on IDR will capitalize, which means the whole interest will be added to the principal and increase your monthly payment. So you definitely do not want to do that, because then the loan principal will be larger and the compounding interest, once we get out of this CARES Act pause, will actually increase. So you definitely want to continue to enroll in the program. We've heard of stories where borrowers had like $40,000 to $50,000 capitalized and their monthly payments went up by like $300 a month just by not enrolling the paperwork. So even if you don't want to do income-driven repayment anymore, continue to enroll the paperwork after the payment pause ends, because any accelerated payments you make, you want it to go towards the principal and not increased compounding interest, right? So I put that out there. Now, what is the impact to your credit if you decide to accelerate your payoff? It has a positive impact as long as you make on-time payments. Is the fact that, let's say you don't re-enroll into income-driven repayment and now all the interest is capitalized and add to your debt burden, that may negatively impact your credit by a few points as well. So keep that in mind, because you're increasing the amount of debt obligation to your income at that time. So the impact will be small, but it will still not be good, right? So it's important to enroll in that paperwork. Now, the last question I had, another question I had is like, well, if you get your debt completely forgiven, like let's say 20, 30, 40, 50, 60,000 over, or six figures of debt forgiven completely, what is the impact to your credit? That has a pretty big impact to your credit. So let's say, for example, you got $100,000 of student loans forgiven because you've made over 120 payments. You were denied in the past, but we help you qualify for the forgiveness through the limited PSLF waiver program, which we've helped several dozen people do already. Then what is the impact? We've heard from clients all the way from 50 to 100 points of impact, because you're literally taking away an entire huge amount of debt relative to your income away from your payment obligation. So that has a much bigger booster in your credit than just a simple act of enrolling into IDR or public service loan forgiveness. So I hope that clarifies some of the questions around like, what is the impact to your student loans? What is the impact to your credit when you enroll, unenroll, or when you get complete loan forgiveness? Lastly, I want to briefly touch on what's happening with inflation. You know, there's a lot of debate right now on the forgiveness. Critics, a lot of debates going on back and forth with the Biden administration on the impact of loan forgiveness on inflation. And we have about 8% inflation right now, which is the highest it's been in the last 40 years. And the biggest political, it's a political disaster for the Biden administration right now. And his number one political fight right now is to figure out how to fight this inflationary time. And inflation is being caused, there's a lot of critics talking about it, but the out of control spending and the 700 billion plus we've sent to Ukraine, a lot of money the government's spending. It's not just on the CARES Act relief through various checks, but it's literally also sending out aid relief to Ukraine and basically getting into a proxy war with Russia. That's literally what we're doing right now. It's like we're in a war with Russia through a proxy. That's basically it. And that's costing the US economy and government a lot of money. And it is what's fueling the inflation right now. And so he has a huge political nightmare to address. And in that, there's critics that say, well, if we forgive loans, student loans, we're going to add to our inflation by 5 to 15 basis points, which is 0.05 to 0.15% to our inflation. So that's some projections. Other people say there's going to be minimal impact. Honestly, we don't know until it happens, but it's speculation. Of course, maybe there's economists and academics that will have a better, clear understanding and be able to provide, I don't know, more accurate projections. But I mean, obviously it's a contentious point of debate right now. And so I think we have that to worry about as a nation, and that may impact Biden's ultimate decision on loan forgiveness. So I know I addressed a couple topics today. I hope it's been helpful. If you have any additional questions, not about the macroeconomics of inflation, but around how student loans, the programs you enroll in impact your credit, if you qualify for any form of forgiveness, if you want to make really big goals to buy a house or to move financially, I know even though there's a lot of inflation, the cost of gas and things have gone up. If you really believe once we get kicked into repayment, making adjustments to your student loans will literally make or break your future financial plans, please do not hesitate to reach out to us. You can get a completely free analysis at myloansense.com. If you think this video has been helpful and anybody else would be helped by it, please do subscribe, please comment, please like, and we try to answer as many questions from these videos as possible. So thank you and have a great rest of your week.